What are the Minnesota bankruptcy exemptions? If you are facing financial difficulties and considering bankruptcy, you might wonder what you can keep during this process. Minnesota bankruptcy exemptions play a vital role in protecting your assets. These exemptions allow you to maintain a basic standard of living while discharging debts. Let's break down what these exemptions are and how they work in Minnesota. First, Minnesota bankruptcy exemptions are divided into three main categories: real property, personal property, and money benefits. Real property includes your home, while personal property covers items like vehicles and household goods. Money benefits refer to certain types of income and insurance. One of the most significant exemptions is the Homestead Exemption. This protects the equity in your primary residence. In Minnesota, you can exempt up to $510,000 of equity in your home. If your property is a farm, this amount increases to $1,275,000. This is much higher than the federal homestead exemption, which is only $31,575. However, to qualify for the full state exemption, you must have owned the home for at least 1,215 days before filing for bankruptcy. When it comes to personal property, Minnesota offers specific exemptions. For example, you can exempt up to $10,000 of equity in one motor vehicle. Household goods and electronics are protected up to $12,150. Jewelry is exempt up to $3,062.50. If you use tools for work, you can exempt up to $13,500 for those tools. There is also a wild card exemption of $1,500 that can be applied to any property, plus an additional personal property exemption of $11,250. Money benefits and insurance also have protections. Most retirement accounts, including individual retirement accounts and 401(k) plans, are fully exempt up to $1,512,350. Life insurance proceeds are protected up to $54,000, plus an additional $13,500 for each dependent. Social Security, unemployment benefits, and public assistance are fully exempt as well. Veterans' benefits are exempt for 1 year after receipt, and disability payments can be exempt up to $1 million per claim. When filing for bankruptcy in Minnesota, you must choose between using Minnesota's exemptions or the federal bankruptcy exemptions. You cannot mix and match. Minnesota's exemptions tend to be more generous for homestead and certain personal property, while federal exemptions may have lower limits in most categories. It is essential to list all exemptions on your bankruptcy forms, specifically Schedule C. This step is crucial to protect your property. If you do not claim an exemption, the bankruptcy trustee may sell the property to pay creditors. Keep in mind that timing is important. The 1,215-day ownership rule for the homestead exemption is vital if you have recently purchased your home. Also, married couples cannot double the homestead exemption when filing jointly. Remember, exemptions apply to your equity in property, not the total value. Understanding Minnesota bankruptcy exemptions can help you navigate the process more effectively. By knowing what you can protect, you can move forward after financial hardship with greater confidence. Always consult a professional or review the latest laws, as exemption amounts and rules can change.